Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in TradFi, digital assets, technology, and financial planning. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site is Andy Baehr, Managing Director at CoinDesk Indices, Stephen Ehrlich, Director of Research Digital Assets at Forbes Crypto, and Zach Pandl, Head of Research at Grayscale. They join us to discuss Bitcoin halving, regional exchange-traded note applications, and tokenization. We'll also take a look at some meme coin activity and a new bill that was introduced this afternoon. 20 minutes, a lot to get through. Let's start with the halving. Clearly, that's what everyone's focused on next week. Andy, is this priced in, or is this kind of a sell the news kind of event?
You know, as one who grew up in traditional finance and really expected things to be priced in unless there was some unexpected event, it's from a surprise point of view, halving's not going to be a surprise. We knew that if Bitcoin was still around, the halving was going to be the halving. We knew it 15 years ago. So from that point of view, it shouldn't change the valuation of Bitcoin, and it shouldn't change price action. Now, we all know that a lot's been written about the halving. You can barely look at any crypto news site without tripping over a halving story. And we know that people will tend to trade around it, and little bursts of momentum will build up around those trading patterns. We love looking at momentum. Our Bitcoin trend indicator does a great job of that. So when people ask us about the halving, we explain it to them. We explain that the miner rewards going from 6 1/4 to 3 1/8 Bitcoin sometime on April 19th or 20th. But after that, they should really just think about trend if they want to have a way to kind of play it.
Right. Does the calculus change now that we have more institutional adoption, the spot Bitcoin ETF in the US?
I don't necessarily think so. And I agree with Andy. I mean, the halving has been clearly priced in, and to me the biggest piece of evidence to support that is if you look at what's happening to the stock prices of prominent Bitcoin miners. I mean, Bitcoin's been going up and up and up, and despite, I guess, this week's reversals, it's still up about 36% or so for the year, whereas most of the major Bitcoin miners are underwater 20, 30, 40% year to date. I think the only one that's positive is CleanSpark, and that's still trailing Bitcoin. So clearly investors understand what's happening in the market, and they're allocating their funds based on what vehicles are most likely to continue growing and perform the best, as perhaps we hit a bit of a rough patch through the middle of this year into Q4.
Right. Well, even the miners declining, isn't it expected that you're going to get less rewards? I mean, have they adjusted their models or thought about other revenue sources to account for that?
They have, and it's one of the, I think one of the smarter moves investors can make right now is buying into some of these miners, because I do think that they are undervalued. I'm talking here about Marathon, Riot, CleanSpark, Cypher. Those are ones that have been trailing. And at some point, there's going to be a culling. There's going to be a period of M&A. Less efficient miners are going to go out of business. And at some point, these ones are going to catch up. To generate alpha, I mean, you guys know this, you have to kind of think, you have to think against the grain a bit. And this is one area that it is undervalued. And the miners behind these companies, the CEOs, they're very smart. I mean, they're complex financial institutions at this point. They know what they're doing. They've been building their balance sheets so that they have liquidity to ride this out. And I do think that once sort of the mining economics reset and everything kind of just settles, these miners will grow, and there'll be a great opportunity for investors looking to buy exposure to Bitcoin at a discount.
Zach, what about the macro and geopolitical impact on Bitcoin? Is it behaving as you would expect?
I think broadly speaking, yes. I mean, I think, you know, of course, the ETFs, the halving, these have been important positives for Bitcoin. But for me, the number one thing is the macro backdrop. You have a booming U.S. economy with sticky high inflation, and yet the Federal Reserve is still indicating that it will probably cut interest rates. Bitcoin is an alternative money system that competes with the U.S. dollar. So the Fed is cutting rates into an economy with strong nominal growth. I think that's negative for the dollar ultimately, and positive for Bitcoin. So I think it's been both these technical things like the ETF approvals, as well as the broader macro backdrop that have gotten this return year to date.
Well, let's talk about that. Hong Kong and UK, right? You see the ETF and ETN applications being submitted there. I mean, Hong Kong is kind of becoming the new hotspot.
I was just there for 3 weeks,
right.
and actually during the 3 weeks, the timeline for the approvals, I sat and met with the SFC 3 weeks ago, and 3 weeks later, I'm not taking credit, we have approvals for Bitcoin and Ether ETFs, and the first wave of issuers are going to start coming out pretty soon. first time I've ever seen a regulator surprise the market by approving things early.
New Forbes headline, and Andy single-handedly
Yeah,
is responsible
yes,
for.
Definitely not claiming any credit for that, but glad to see that that market is looking to replicate the enormous success that's happened in the United States. Very different market, very different retail culture, very different sort of advisory, family office, wealth, institutional culture. But still, this idea of having a wrapper when you can just go in and buy GBTC in your brokerage account or in your retirement account, it just makes things a lot easier. And I think the Hong Kong retail market will be well served by that.
Yeah, I mean, even anecdotally, the conferences that we're covering, everything is happening in Hong Kong. They're focusing their allocation of budget dollars to be in Asia.
Yeah. But I think one thing also just to kind of keep in mind, and some of the excitement, I mean, the Hong Kong ETFs, I believe, have there's been reports that they've been approved, but they haven't been officially announced yet by, I believe, the SPC. In London, they're accepting applications for their own variation of an ETF, and I believe next month might be the soonest we see some of these to begin trading. But none of these markets are remotely as big as the US, especially in terms of ETFs. And I think some of the real excitement over these new announcements really just comes from the fact that investors are getting a little nervous about inflows slowing down into these U.S. products, and that there's actually been, I think last week was a negative outflow product. You probably know better than I do, and it's one of a few just overall for U.S. ETFs. So they're trying to find where that new source of demand is going to come from. And in Hong Kong in particular, there was a lot of excitement because maybe mainland Chinese investors would get exposure, and that does not seem to be the case here. So like as you were saying, the retail market, you have to understand the size of this market. It's not going to be enough to really move the price, but it just kind of shows how much, I guess, like how much excitement there is about these products, and they want that next set of growth now that we've hit a bit of a lull.
And that's a point they make too. Hong Kong is a proxy. Yeah. Right. So if we see success there, chances, well, hopefully we'll get some more success in mainland as well. But is there anything that you can tell us about inflows, outflows that's note here?
Well, I think on the ETFs, investors are just going to have to get comfortable with this product structure. One of the great things about ETFs is how transparent they are, how efficient they are. We will see these products see inflows. We will see these products see outflows. They've been enormously successful to date. I would expect them to continue to see significant inflows as a broader range of advised wealth gets access to these products over the course of the year. I think that we're only at the beginning of the adoption of the Bitcoin ETF products.
Right. Well, of course, tokenization as well. I mean, that has the potential to create value for investors.
Yes, I think tokenization is the clearest tangible adoption trend for public blockchains that the average investor can see today. And I think there's a really, it's a straightforward thing to understand. We're upgrading financial markets infrastructure, putting it on public blockchains, and it has a straightforward investment thesis. Just buy Ethereum. These things are going to happen on the largest smart contract blockchain. That's where the users are. That's where the liquidity is. And I think this is a huge positive for Ethereum specifically.
Yeah. Let's talk regulation for a moment here. Good timing. New bill introduced, right? That is looking to put the framework around stablecoins.
Yes, I believe this morning, Senators Kirsten Gillibrand from New York and Cynthia Lummis from Wyoming introduced I guess a bipartisan stablecoin bill. I mean, stablecoins, you guys obviously know, are tokens that are meant to be pegged to a particular asset. In this case, and in most cases, are the U.S. dollar, notwithstanding the tokenization discussion that you just had. And I think this is exciting for two reasons. One, stable coins have become somewhere close to $150 billion business. I mean, this is real money, and some of these companies like Tether, which dominates somewhere 70 to 80% of the market. I mean, they're one of the largest holders of U.S. Treasuries in the world at this point because they buy them, short-term Treasuries, to collateralize the tethers that they have in circulation. So it's time to have a bill so that these players can be regulated, so that there are clear lanes in the road for new issuers, regulated banks, and other institutions that want to get in. And this, as far as crypto, which can in some ways be almost akin to a religious war, as far as like how strong feelings can get about it, this is one thing that it seems like everybody understands and everybody agrees on because it's simple. And the most exciting thing about all of this is that perhaps the biggest roadblock to any crypto legislation, Sherrod Brown, he is the chair of the Senate Banking Committee, a Democrat from Ohio. A Democrat from Ohio. He actually signaled that he might be open to including stablecoin legislation either in a must-pass bill or something else.
Right.
So,
but it also provides framework around what is not. allowed or what can't be considered.
like algorithmic stablecoins,
Right.
like Terra USD that collapsed and sort of led all the liquidations in 2022.
I mean, we talk about that every single time we do a digital asset panel, right, Andy, that we need framework around it. We can't enforce by regulation. So this is something, okay, this is what's acceptable. This isn't. This is how it has to be backed.
That's right. And stablecoins are a little tricky because you can't take baby steps, right? Stablecoins are important even in the pairs trading. You go offshore and Bitcoin is traded versus Tether or versus USDC way more than is traded versus the US dollar. So there's the access question, the use question, how do you get yield on it, how do you loan it, how do you have a term structure of interest rates around it. There's a lot to solve to try to represent a fiat currency as a stablecoin. Use case by use case might be the easiest way to go. The thing is, how much public opinion and how much education needs to take place to support initiatives like this, but we need to get at least a couple of rungs better than we are right now to make sure the market structure around how digital assets are traded can remain, as robust and safe. We don't want to have to worry that stablecoins become part of the risk profile of how the digital asset market.
And it's its own asset class.
Yeah, absolutely. I think stablecoins open up one of the biggest wins that we can have as an industry, which is payments. And it's going to be very hard for that to happen if stablecoins aren't a regulated asset in the United States and where banks aren't participating. This bill is going to allow us to move forward if it passes. So I think it's a big positive for the industry and for payments-related applications in particular.
I think when we look about digital asset regulation, providing a framework around that, they're trying to put this in a bucket where it's an equity, it's a commodity. Perhaps, and this is how the EU is legislating digital assets, it's its own asset class that operates in a certain way. Do you think that's how regulators here in the US should be thinking about Bitcoin digital assets?
It is a very challenging question. I think we can say clearly that Bitcoin is a digital commodity, and the regulators and legislators, elected officials, are going to have to let that process play out as they look at all the other assets in our market as an industry. Any kind of clarity would be helpful, but it's going to take a little time to sort out those things. In our view, native blockchain tokens are digital commodities, but there's a lot of other things. Stable coins are a little bit different. Of course, we have derivatives in the space, and all of these parts of the industry are going to have their own clear legislation and guidelines.
But this discourse is good, though.
Yeah, and
Yes,
I think
absolutely.
the one nice thing about this bill in particular is that it states clearly that stablecoins are not securities. And that's why I think this is the lower hanging fruit, because it doesn't get into those discussions of what is a security, what is a commodity, when could a security morph into a commodity, and vice versa, which are real discussions being had. So that's why this is clean. And I also think it's really important too, because at some point there's a rise in stablecoins that are trying to offer yield and income to holders, and that could just open up a Pandora's box. So it's really important right now to have clear legislation for basic stablecoins that are going to be the bedrock of hopefully a new payments infrastructure, and this bill might be the ticket to do it.
Right, I see you shaking your head.
No, I was thinking about your question about whether digital assets should be thought of, as a group rather than one by one, and sort of evaluated one by one. And back in Hong Kong, you meet with the regulator, and they have a virtual assets team, and they're not really concerned with, does this slide into the securities bucket? Does this slide into the commodities bucket? They're treating them like they treat them, right? And still, you have to have the one-by-one approval, right? Which gets a little bit cumbersome, really, to give investors a choice of diversification, right? If this is kind of an investment vehicle, we should at least be able to offer retail investors a way to diversify and get sort of the best of the layer ones or the best of the blockchain-based things, not just put all their eggs in one basket. And I think that's the second challenge after even just calling digital assets digital assets.
Right. Well, because it could be one of two things. It could be a store of value. It could also be a means of payment, which is what I think makes it unique.
It could also be a story for growth. That's, Ethereum, I think somebody last week had a really great way of putting it. It will be the settlement layer of the digital asset kind of universe, right? So even if it's not the dominant sort of execution blockchain, it will probably be the dominant settlement blockchain. And that's important. That is a growth story, right? If the stablecoin initiative moves forward, those stablecoins have to end up on a blockchain somewhere, and that blockchain is going to benefit from that activity. So think about that. We think that Ethereum is, the biggest and oldest, but there are many others. This is why, we like index positioning with many layer ones. many kind of Oracle companies, many DeFi platforms, put them all together so that the winners kind of float to the top.
Right, especially as interoperability has improved as well.
Correct.
Yeah.
And I think that's really going to help to bridge those gaps when you think about how, DeFi and TradFi work together.
Yeah, yeah. I mean, pulling liquidity between DeFi and TradFi, and
Right.
just in DeFi overall. I mean, I don't see the need for having a DEX on Solana and the one on Ethereum, the one on at some point, like bringing it all together.
Right.
Makes a lot of sense to me.
Let's switch gears, go back into geopolitics, but domestic. Do you think the election is going to have an impact on Bitcoin?
There's no doubt the election will have an impact on our markets, on Bitcoin in some shape or form. I think that the question, of course, is what are the policies and how might that work? What I would stress is I think it's more important whether we have unified or divided government rather than Trump or Biden. Both political parties don't seem very concerned about large deficits and want to spend more money, want to expand the deficit. We saw that happen when you had unified government under both presidents. Both candidates have been president before. So I'm focused on that question. If we have unified government on either the Democrat or Republican side, I think we will get bigger deficits, and that'd be a positive for Bitcoin. I also be focused a bit on my prior life. I ran currency strategy at a Wall Street investment bank. Bitcoin competes with the dollar. Look at the candidates' statements about the dollar. This is becoming a new issue. During the first Trump administration, there was some question about whether that administration wanted a weaker dollar as a way to support exports and shrink the trade deficit. Will we hear that again from Trump or his advisors? I think that could affect currency markets. I think that could affect Bitcoin.
Yeah. I couldn't agree more. I think, whenever you look at the price of Bitcoin, you're looking at its competition versus the dollar, right? It's in its purest form. And as the dollar gets weaker, Bitcoin is just going to look more expensive. Your earlier point about the moving trends of inflation and expectations for rate policy, that's the way we look at it too. It's just competing against one source of value versus the other.
Yeah, I was going to say, I know Trump has already said that he would not appoint Jay Powell again for another term if he does win. So, and
the next Fed chair is going to be an important question. Jay Powell's term comes up in 2026. The Fed already seems like it's tolerating above target inflation here. Inflation is running more like 3 than 2, and yet we're talking about rate cuts. So that'll intersect with this choice of the next Fed chair, and what Trump and Biden say on that topic during the election campaign, I think could also have some bearing on Bitcoin.
Right. In theory, they should be apolitical.
Yeah, I think one of the issues with the Fed is because Congress has ground to a halt, not just for crypto, but almost for anything. I mean, look what's trying to figure
passed 40 bills
with Israel and Ukraine and everything, that like the Fed in some ways has had to become by necessity a political body, like doing in some ways the work that Congress should be doing. So it just raises the stakes for anyone that gets elevated to a voting member of the FOMC or obviously the new Fed chair.
This brings us all the way back to the halving, because now that the ETFs are in the market in the United States and there are $52 billion in there, now that the halving has taken or is going to take place imminently, there's no other Bitcoin news, right? Bitcoin's just going to be Bitcoin, right? Any Bitcoin news that is inherent to Bitcoin is going to be unexpected. The macro story is really going to be the driver, right? There are talks about flows, who's buying, who's selling, inflows, outflows. We've kind of got past that. So Bitcoin can finally breathe and be Bitcoin. And I think that election, macro are going to drive the story. This is what makes it even more essential, a participant in people's portfolios.
Except for the meme coins and all the
Oh yes,
BTC,
we have 2 minutes.
DeFi.
Go ahead, give me a thought.
I was just going to say, I mean, the meme coins has become like the new hot issue in crypto. I mean, we moved past like DeFi and yield farming and airdrop farming. I guess that still is a thing, but now that Bitcoin is kind of like overtaken 50% of the total market cap, putting on ordinals and all these different protocols for creating meme coins that have pretty much no value whatsoever in my mind, even though people will buy them. I mean, that's kind of like the new focus. It's a good thing, I guess, for miners, though, because at some point as the mining rewards go down, this creates transaction fees that will go to their bottom line. But I'm very nervous about them because it's just, retail investors are going to put money into it, and it's just such a wild west. It's like the ICO from 6 or 7 years ago, but in many ways worse, because at least the ICO theoretically promised to do something for somebody to grow value for these tokens, whereas these meme tokens really don't even purport to do anything like that.
That's a good point. That's unwelcome news for the Bitcoin ecosystem. But hopefully aside from that, there won't be too much else to disrupt the valuation of Bitcoin from its macroeconomic drivers.
Sure.
All right, appreciate the insight, everyone. Thanks for joining us on Trade Talks. And thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.